Hey guys, girls, welcome back. Let me see if I can, oops, move myself this side. Okay, so I'm most probably going to be on mute for the next 30 minutes. Just want to see how everything plays out when the market opens. Now, I've got a trade since London. I'll make a video later or take you guys through it a bit later. So I'm trying to secure just over 2,000 dollars on that trade, but let's give it another 30 minutes now, and then I'll see you guys soon. Okay, let's see. I've got looks like we want to run up here a little bit. I'm very conscious about the fact that there's still a discount and a fair value gap here down here on the, I think, 4 hourly, but we just ran a liquidity, so we might want to run up and then come down or something to that effect. I mean, this would have been a good trade because this is an IFEG. Let's just IFEG, which I obviously missed. Can see a nice test there. If I find a nice swing pattern here, I'll definitely obviously take a long for some sort of profit. I've already secured some profit, so let's just see. Also, I just want to see any big news. Let's see. Crude oil inventories coming out at but later, not now. So that's some big news. So let's see. Maybe we're going a bit sideways here. And if it goes without me here, then it's also fine. I'm not gonna be too fussed about it. As much I would have liked to get in here. I mean, there's a test. I don't see clear equal highs here. And I know this is the June contract. I must probably need to go over to the September contract. That's why you see it's a bit thin here. But let's see. So this was also the entry, and I'll explain to you why. I'll make it a little bigger. So 2 black candles. Yes, I need to see. No, I'm not gonna use that. I thought this black candle's lower than the white. It looks pretty even. But let's see, why did I took this short earlier? I took this, was the 5 minute. Yes. So under 5 minute this morning, we took out the high from these highs here, this equal highs. We went up and we ran these equal highs, and it was right in London. It was 2 white candles up and a black candle closing below. That was your short stop loss up here, and I've targeted these equal lows which obviously it took us the whole morning, or whole London mostly, to get there. But it's there. It was a $2,000 profit, which was great always. And now, I mean, all these little highs, I mean, here you can see there's a swing point here, there's liquidity up there, there's liquidity up there, but I need this thing to come all the way down here into this IFEG, which formed on the 1 minute, to give me some sort of entry reason to, you know, right after we've run this. But also bear in mind, we've got this long wick. Nothing stops us from running lower into this big fair value gap and this what you call these discount zone. That's why I'm gonna be, I know this blue block is the discount, and then there's a bigger fair value gap up here, so nothing stops us from running into that. Okay, let's go back to 1 minute, see what we get. If these two white candles, black candles down, stays like this, or another one forms, I want to see a third candle or white candle close above the open. And let's just see where we are from a discount. Yeah, under the 50% of this fair value gap, that would be a discount in this setup here, or this range. Let's see. Okay, so that's not something I would trade yet. So let's just wait and see. Still got time. I mean, the macro is now between 9:50 and 10 past 10. That's when the macro normally runs a liquidity or make its move. So let's see. Okay. Let us see. Okay. I mean, this little fair value gap on this black candle could also act as some sort of resistance to push through and then go lower. So if things don't line up the way it should, then it's best just to watch price. So this is a 4-hour chart, big fair value gap here, and then this blue one is a big discount from this swing point that generated this move all the way up here, and where it turns around now. This is also an inverted fair value gap. If it closes below, then we can expect price to go lower in here. So maybe let's mark this out as well. So here you guys can see a nice IFEG as well at the highs, and this was right at the 20, just above the 20,000 mark. So what we might see is, but this black candle got to close below this IFEG's low in order, and then it might tap into it to drop lower to go into a discount. So for this, I'm bullish, and the reason I'm bullish is because this fair value gap here, as long as price stays above or within this fair value gap, I don't see any reason why price will go down. If we break this fair value gap and turn it into an IFEG, an inverted fair value gap, then we can expect price to go lower. And where's lower? Lower, it could be this equal lows, it could be this fair value gap, there's some fair value gaps here, and there's some liquidity down here. So there's a long way down if it wants to go down. So for me, I would like to see what happens here, and I would consider a short from here to this, maybe this low here, or this discount zone. That's it. Not hold it from there, try to get down here, because that's how I'm run. There's too much at play here that can change price to go higher. So let's be very specific what we want to trade, and not trade for something we want to, want the market to do what we want it to do. This swing pattern is not a pattern I'm trading. So if you look at my videos, I've got explanation there on how to trade this pattern. But because it's a white candle, and the swing point is a black candle, that doesn't count for anything. If it was a white candle and that pin candle was a white candle, and then we had this big black candle down, of course I could then short here, put a stop there, and target these lows. But yeah, we'll have to see. I'm going to drop down to a smaller time frame. Keep an eye on this. Also, for those who don't know, tomorrow is expiry date for the contract. Then we move over to the September contract. You can go to the September contract now. I'm unfortunately still on the June contract, but I'll change it a bit later. Going to go to a 1 minute here and show you guys what I mean. Remember I said there's this little fair value gap here that's holding price, and now we've got this big outside bar taking liquidity shift, and now we can see some sort of push lower, but we're still in this fair value gap, so we're not touching anything. Right, let's do it like this. But my expectancy is we're going to go targeting this low, and then obviously targeting these blocks here. But it would have been nice if I saw two white candles and a black candle, then I would have shorted it there, but unfortunately it's not giving me anything there. So we'll just have to wait. I mean, price can jump here and just run right up the page. Okay. Okay, let's see. Another outside candle to push price lower. There's one black one, another black one. Outside candles norm is basically, let me just change my. Okay. Okay, let's see. In this case, this liquidity that was taken earlier, now it formed the entry to go long for these liquidity up here. This here. So this would normally be the entry. And then you could target something like that. But again, I don't see clear. I mean, this is the only liquidity I see. But obviously there's some downside there. So I'm not taking any trades here. Liquidity. Because this thing can, poops, drop right through here. Okay. So take that off so people don't think that's something I trade. I'm just showing you guys where I would have entered if it was a valid entry for me. And then all this nice liquidity or trend line, that's what normally makes people think, yeah, we're on the right side, we're ready to go. Let's just see on a 5 minute what this all looks like. See, this looks like it's going to break down. I mean, it is in this range in a discount now, but yeah, like I said, there's stuff just below that. So, and we broke below this inverted fair value gap, so we inverted it again. So now it's either going to go this way or it's going to go down. Taking that off because it's not valid for me right now anymore. Okay. If there was a fair value gap on this side and we have seen this and this candle close up there, then I would say yes, now I'm looking to buy, taking all this liquidity out. And these are normally the things that trick people, because they will take their Fibonacci and they'll say, okay, we're in an OTE zone, it formed a pin, let's just buy it. Wait for this thing to cross over there and buy it, and then boom, it just drops through the bottom. And then what you need to keep in mind is this little fair value gap. If this white candle was an up close candle above there, then I would have been in the trade. Alright, let's give it some time. I'll be back in a minute. Righty, let's see what happens. So now people are thinking, oh, this is just going to give us a much better return on our investment if it goes down and forms something down here. See how those outside bars gave away where price is going. This was just tricking everybody who trades inversion fair value gaps, and the reason we didn't take anything, there was no pattern here. So that's why, as much as these fair value gaps are the best or very high probability strategies, this makes it, my swing point entry, or the way I see it, makes it even more valuable to get it right. Okay, now we're getting somewhere. Let's just see what an hour. Yeah. Oh, we didn't even look at the close of the 4 hour. So that was inverted. So that was obviously bearish. Let's see if we can get some sort of a pullback for a short or something. Because we want to get into this dark area. Be nice to see some sort of pullback and then give the entry to short it. The key thing about the way you trade is not to say, all right, if I enter there, $2,000 is going to sit over there and target that. Chasing money is not going to make you profitable. You got to look at a chart without anything to say, all right. If we sat here and we said, all right, guys, we've got this inverted fair value gap, let's long it here, and we need to get up here to make decent profit. And then this happened, and you're like, okay, so why did that happen? The thing is, you got to look for clues that gives you good conviction to say, and not just me showing you a pattern that I follow. I've picked up this pattern by trading all of these other things. I'm an ICT trader, and I've learned everything from ICT. Obviously what he taught on the internet, but there's no way you can trade all of his concepts and be profitable. He'll tell you different, but that's fine. So what I've done is the fair value gaps is something that made sense to me and it worked well. But then I still got to get it wrong from time to time, and I backtested quite a lot to see why. And I've picked up that this swing point is one of the things, outside bars as well, and discount, and those PDRAs. But if you understand discount and premium on its own, you only have to trade that to make money. And then then the swing point was the thing that I keep seeing happening over and over, and the more I tested, the more I forward tested, the more it works out. The more I go against it, I get stopped out, and now I'm a firm believer that that's the way to trade, and that's how I trade, and that's how I make money. And if it's not there, there's no reason to chase. And I don't trade anything below 1 minute. 1 minute is fine. 5 minutes is fine. Those are my entry time frames. I will then obviously use my higher time frames to construct some sort of direction, and sometimes an hourly, because if I get the direction right based on my pattern on a higher time frame, it will make sense that even if it moves in my direction half the way, it's already giving me more than 20-30 points on a 1 minute. So all I need to do is find that pattern on a higher time frame, jump to a 1 minute, and look for that pattern in a fair value gap, in a discount if I want to go long, or premium if I want to go short, and look for my pattern, enter on it, keep the stop tight, move to break even as soon as I see it fit best, and try to get 2 to 1. And I promise you'll get more than 2 to 1 way often. So, and I'm not saying try to go for 10 to 1s. I look for, obvious liquidity, and that's what I do, and that's what I've done with the London trade this morning. My cutoff time for trading the AM is right here. So at 11, I'm done. And then I most probably will come back at the PM session, just after 1, and see if there's any opportunity sticking out set. Boom, boom, boom. We taking out this fair value gap there, but this is not my pattern yet. I want to see it come back and form that pattern, then I can take it a little long. The price can come up here as well. Let's draw a line. Let's draw a line. Could come and test this level. I mean, fair value gaps could do something there and then go down, or this can come down now, run this to go higher. I don't know. But there's nothing. The only thing I see is manipulate, and then we created all this nice liquidity up here. This is a potential long, but for some reason I don't know if I like it, because I don't trade these things just like this, because we never got to these 50% markers. I would thought price would go in here. And the 4 hourly, okay, 4 hourly, we could see a retracement then drop. See, that's not something I like. I need to see a black candle in there and then a white candle forming a swing point in there. Then I can look to buy something. But not now. See this outside bar now. This black candle down. Consolidation, if you're really on a 30-second. That small candle's consolidation, manipulation, shift. Now we want to see a test on this black candle and go higher. Because that will be this. See, that black candle is right at a discount. This is a scalp. If you take it, you buy it at the blue line and try to take it up here. Keep your stop right below. Yeah. Now we want to see the spike in there, and should hold price, should hold price. Go touch the blue line. Not trading it, guys. I'm just saying there's reason up here. There's an entry down here. I'd love to see something in there. Just didn't. Too many little fair value gaps. There's one, there's one, there's one, there's one. And that all poses resistance, 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 resistance. Now we get breakthrough resistance, support. Let's see what happens. There comes the buy. And it just don't get to that line. It misses them. It misses them. Okay. You want to play like that? Guess it's fine. What does the 5 minute look like? A big fair value gap. Righty, about to invert this one. That's alright if I can't get a trade. Right, and now we're inverting. Now if we can see a pullback and the pattern forms here to 50%, be a good place to buy. But remember, we've got this level here. Just be careful. If you're a fib trader, this is where you would pull it, add it 50%, that's where you would enter. And then right up here, that's where you would target. So if we see now black candle and then a white candle, would be a nice entry. But you won't take it far. I don't know how far it will go. 1, 2, 3, 2. Buy that, boom. Dum, 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 dum. Okay, this is looking good. Now, don't touch that low. Go up and close above that. Okay, you're going through. Pattern's not there. The pattern's not there. Okay. See what happens here. Remember, if you remember now, every time you go low and up, you form a new trend line, like that one there, and that's only liquidity. So for this to stay like this, I would keep this intact, not to take that out. Go high, take out that high, and boom. Get people reason to believe we're going higher, and then reverse on them. Okay, so now this black candle's high, that's the key. If we don't touch the low, if we close there above that, I might look at a long, but just up to here. But if we go through it, okay, well, then it's nothing. Why do I only take it up to there? Because that's a level for potential rejection, and this is a 1 minute, so I can't just rely on this pattern on a 1 minute. I need a bigger time frame to support the idea. So 10 seconds, let's see. Okay. Let's say 1. If it closes above it. No, it did not. It did not. It didn't. It didn't. Alrighty, now it might go up there, but see, that's when we're not taking the trade. Of course. Of course, but Neil didn't get his entry. The 0.27 is the target. Let's see. You take it from there to the high. So that's where you should have entered. That's your target right there. That 0.27. That would have given you easily 15 to 10. Alright. Go on. Go touch that. I know you want to. Dun, dun. It's going to screw people's minds. 20 minutes, then that big news comes out. That all inventory stuff. So you don't want to be in a trade when that happens. Okay, see now people think, oh, we took this high, we're going short. Now this thing can go, boom, take everybody out who thought they were going short. Or maybe they're wrong. Oh, they're right. Remember, retail can also be right. Dum 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 dum. Getting close to my ending. Alright, let's see. Get through that spike. Go through it. Shoot through it. Boom. Come on. Oh, now we're consolidating again. Okay. Da, da. Da, 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 da. Sorry. I at least thought you could spike to that 0.27 and then give you a reversal to go lower. at least. At least. So remember what I normally say when there's a big a news event coming up. It's normally like your NFPs, interest rates, FOMCs. But then we've got this high impact news event that's coming up in 18 minutes, 17 minutes. So what I normally do is, whether this crude oil inventory is not as big as NFP or whatever, I'm just saying, have a look what the market does. If the market spikes in any way and leave this nice big tail and go the opposite direction, look for that wick that it formed. That is creating new liquidity, and in the future, in the near future, price returns to that wick where it stopped. So that is a good target to target. So maybe we'll see something now, and then today, then in PM session, we get a nice run or setup to take us to that wick. And I don't know where the wick's going to be, low or up. I normally just sit and wait and see how it forms and where market's going, and then when it turns around, give me my setup, and I like to take it all the way there. So I'm going to put us on mute for till then. Okay, so we know this 0.27 is a target, and that 0.27 is right with this low where we're expecting a spike and a reversal to take this. So I'm taking this off. This was a nice entry, but I would have expected to go all the way up there. It didn't, but nevertheless it didn't take any trades. So I'm going to see you guys in a bit, and let's see what this news does at 11. Okay, nothing to trade this far. Righty, let's see what happened. Nothing. 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 Interesting stuff. Look at this. These are relative equal. And that is where we want to see a rejection. So price could come. Boom. Run everything there because people put stops there to go lower. Run them and then drop down from there. But let's see. Okay, macro time starts now. Let's see what it does. I'm not saying it's going to do anything because we got the news coming out in 10 minutes. In 10 minutes. Okay, go for those highs in there and reverse. Let's see it. See, people see this as a little fair value gap. We invert it. Now we need to go long. Look, this was a nice one. We have liquidity up here. Nothing here. There's this big steep drop down here. That gives you the best ROI to target. Is this could go there, of course, but let's see. Tum. I don't like this shallow run. I need this to go higher. Oh, interesting stuff that we haven't looked at was this. Okay, makes no sense. No, so that's fine. Again, that's not the swing point, that's white, but the black candle did not close below the open there, so can't take that. I need something that is solid. This would have been great if, no, where was that trade? Oh, yeah. But it didn't, see? We didn't do it. Look, you would still be in small profit, yeah, but it moves nowhere. Okay, now you got a fair value gap, a black candle, a white candle. Could be something there. Because this is coming from a fair value gap. It's a black candle, and there's liquidity, and yeah. But this is more a tiny scalp. If you really want to take it. But it has to close, obviously. And let's see what it does. Now if you close above that, like that, now you can buy and target this. And your stop is right here. Because the probability for price to run higher is much greater. See? See, that would have been a nice entry. Bomb. If it was just looking for 2 to 1. 2 to 1 is there. But now you've got this white candle. This black candle closed low because it took those. Then we got some liquidity down here. 2 to 1. 2 to 1. See? 2 to 1 is easy to get. You just follow the rules. Give us one more. There you got your 2 to 1. Easy. Now it's probably going to run for 10 to 1. I don't know. All you gotta be doing is sit and wait patiently. Now, if this candle comes black and close below this one, yeah, that would be something I would look to sell. But to take it out, maybe not. If this candle formed a nice fair value gap with a pin and close below, that would be also a nice trade because you're coming from a fair value gap. Oh boy, let's see if you took this trade. I mean, nice 6-point stop, and that would have been your 18-point targets. Don't know. I don't want to talk after the fact here. The main thing here is I've shown you guys how we read price where we wouldn't have done anything, and then we found it, and all we had to do is take a 221, and we got the 221 because there was a narrative here. There was equal highs, there was a fair value gap, and now it's just going higher, which is also fine because we didn't take any trades. And remember, we said there's some liquidity up here. I mean, this, if only we just had a nice entry here, but we didn't. But that's an entry on its own. But I like the extra confirmation. This thing might go, boom, take all that liquidity out. Let's see. Let's see what you do. Show me what you do. Show me what you do. One minute for the news. 1 minute. Counting down. 3 seconds. 2 seconds. 1. Here we go. Maybe nothing happens. Maybe we see a spike up and take all this liquidity out and then make a long term come down to go up. Or nothing happens. Alright, let's see on the next candle what happens, and then I think I'm going to call it a morning, and then I'll come and see what happens in PM. We could also see nothing happening because of the expiry that's tomorrow. Because people might still be booking their positions across or something, carry it across. Now, just put this in context. Imagine this was a daily candle, boom, 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 and that happened. That little pullback, and then this move. I mean, this would be hundreds of points, and that's how you make money using my, the swing point strategy. But if you do it here, I know it's moving a lot now, but normally you take that, you target the high, it's not much. Okay, so there's nothing. I still think this long. So we took this out. Now, guys, let me show you something. If we close above this in the next hour, at the close of this hour, I mean, this thing can go all the way down to this fair value gap and then go back up. But if we close above here, then we have the 1, 2, 3 candle, run liquidity from a nice liquidity discount zone. We close there, we could look to buy and target these highs. That's what we could do. But let's see what happens in the next hour. And what I'm going to do, I'll take the lines off so we're not confused. We know we want to see something happen here. Close above. Let's see. I'm going to call it a day there, and I might come back online around 1 o'clock, but I'm going to see what happens. If there's a trade, I must look. The problem here is, if you take this trade, let me show you. Even if you take, say, just close above, your stop loss is going to be $118 points. That's a lot of money. But if we close above that and you go into a 1 minute and look for a swing, a bullish swing in a fair value gap and all of that, that is worth trading, because that will minimize your risk. So let's call it there. I'm gonna stop here. Thanks for joining me. Thanks for sitting with me, picking the charts. And we haven't lost money because we haven't taken a trade. There was a nice trade there, but we'll see. There's always tomorrow. And yeah, have a good evening or good afternoon, and chat to you guys later. Bye bye now.